USA will see a crazy inflation if Donald Trump gets what he wants. As a matter of fact, I believe that that will actually trigger a recession, which the economists are saying not going to happen. Let me tell you more in detail. Now, with that, remember disclaimer apply as usual. Now, one thing to note, guys, is that we saw what happened during the White House. We saw this Elon Musk, Tim Cook, all were present during the inauguration. And I told you guys that because of that, you should buy into the NASDAQ counter, which already happened. We saw the NASDAQ going up recently from the lower end of this area here, about 20,800. We mentioned that as long as the people that is invited for inauguration are the IT expert guys or the chairman of that, the NASDAQ will be a buy. And truth be told, NASDAQ went up to 21,850 series. And as fact, I told you that this will be a good time to take some profit. And we saw last Friday, we see some profit taking. So now where are we going to go down? I think it'll go back down to 21,000 very, very soon. Now, what is the main reason for me saying that is because we remember Donald Trump really wants a lower interest rate and he wants it done immediately. And of course, this is not very possible because we all know that Federal Reserve and Powell and his colleagues emphasize the importance of Fed independence, and Powell in particular frequently has insisted that central bank do not make decisions based on political-based consideration, and Donald Trump has not have the statutory authority over the Federal Reserve, although he nominate the members, all right? So the thing in short, I don't think the Federal Reserve will take that position now to actually cut interest rate in the way that this Donald Trump wants. And of course, what's the main reason? Now, we all know that recently, because everyone believed that Donald Trump is going to help the US economy, which he did. His policy is pretty good. And then what we saw is that foreign investors have rotated funds right into the US stock market. And that basically brought in about $76 billion over the last 3 months. And we can see that now that the market breadth is also improving, and 89% of the stock at the S&P 500 stocks are now at a 10-day moving average, which is a very high level. But the question is this, can this sustain, right? So this is the thing here. We have a lot of earnings coming up. We will be looking at the earnings. And of course, if the earnings come up, we do expect a pretty good numbers, but then the forecast, I don't think will be good. So that is something that you need to take note for this coming week. As a matter of fact, right now, we all saw that the US IT sector market cap is already at a heady 35% of the total market itself. And of course, this is something similar we saw back in 2000, and then we have a catastrophic sell-off later after that. So we were seeing something similar. We must be very, very careful. And the thing is this, but the economists are saying that no way, they seem that they can avoid a recession. As a matter of fact, based on a survey done by the WSJ, which is the Wall Street Journal, that they believe that there will not be a recession. And in fact itself, we were at a high scale back in 2000, but now at a lower end. And I don't think this is actually correct. Because now the thing is this, Donald Trump has said that he'd rather not put a tariff on China, and that pulls off the dollar down because there was a demand, because everybody thought that Donald Trump will do some tariff adding on. But since now he has decided to lower down his this interest against the China tariff side, that causes the dollar to fall. And the thing is this is what he wants, right? The dollar to go down. But then again, that is against what he has said. So a bit of this confusion now in the market. And if that's going to happen, we all know that that will only bring the gold price higher. So I believe that gold price will be going back to 2787. Now there should be some pullback in the midterm because I believe the dollar is going to strengthen a little bit. But then after that, I think gold will go back up again. So 2787 will still be my target for this coming month itself. Okay. And the thing is this, I need to go through this again. As you know, when the Federal Reserve cut interest rate, usually the 10-year yield will follow, right? So if the Federal Reserve increase the interest rate, the 10-year yield will go up. Okay, so this is pretty simple. But the problem is this, the last few times the Federal Reserve have been cutting interest rate, but yet the 10-year yield goes up. So this is against what the normality is. And what's the reason for that? Is because apparently now people are not buying the US bonds. And if people are not buying the US bonds, we have an issue here that will create a big problem for the US government. So eventually, Federal Reserve will come in to save the day. They will have to print money, right? When they print money to buy the US bonds to save America, then what will happen to the dollar? The dollar will plunge. And if the dollar goes down, then what will happen again? You will see gold price going up. You will see inflation going crazy. And that's my reason why I believe that inflation will hit the market. And when that all happens itself, we're going to see a big issue for the economy. And because of that, we can see now we have a inflation resurgence again in Kansas City. We see the long-term inflation expectation from the University of Michigan has reached 15-year high. And of course, we have a lot more important information tell you that inflation is going to go up again. And of course, people are not going to buy more homes because they know that nowadays the sentiment is pretty bad and they fear that interest rate will move around and it may even go up if necessary. So people are getting very upset with this, and this is not good because we are going back to where we saw back in 1980s when the buying condition is terrible, and we do see that it comes with a recession. So because of that, I'm pretty sure we will see a recession if Donald Trump get what he wants. Now, of course, at this junction to say all this, people are saying me I'm crazy because that is not possible. But you guys, you must understand that we all know that there's a lot of speculation in the so-called the down money, and when they are all into equities, we all know that things will get very, very bad. And of course, with this ongoing right now, the S&P are not performing as what they're supposed to do. It's back to 1998, 99 level. So again, all these tells me that you need to be very careful because it's a similar occurrence back then where it was a dot-com bubble and everything seems in the same pipeline. Now, with that, we can see that the LEI, the US economies, are falling as if it's going to be a severe recession. But again, the reason why it's coming down, what the market going up? Because the market focus on the technology counter. But the thing is, we must understand that this actually is more for the manufacturing sector, which has been contracting the last 2 years. And once the market have decided that the US technology has come to a point whereby it's way too much to expect, then they will refocus back on the manufacturing, then things will get pretty nasty. And of course, one thing to note, when this inflation goes too high, usually the US technology companies will get hit first because of the heavy costs, and all this will spread itself. So because of all that, I believe the Dow Jones is going to pull back pretty soon. I think that we're going to see a bit of pullback right here now, back to somewhere around here. That's going to be about 43,350 area. All right, about 43,350 to 380 area. And because of that itself, you can see that usually when this happens on the Williams percentage indicator, it has a pullback. So guys, it's not advisable. It's in fact advisable to take some profit off the table and go slow in the market. All right, hope you like this video. This is Kel signing off. Take care and have a great day. Bye-bye.